What did the gold tariff concerns do to gold in the past 2 weeks? What is the true financial vessel of security? Is it gold or is it cryptocurrency? I'm Eric Sapanik, this is John Caro, and this is the Gold Spot. So in the last 2 weeks, we saw some volatility in gold. It actually hit all-time highs and then it came back down. And this is all due to some of the tariffs that were a concern coming out of Switzerland. And here we have our gold Switzerland analyst, John Caro. He's going to tell you all about that.
Well, what happened was one of the bureaucrats in the Customs Bureau sent a letter saying that the gold bars made in Switzerland for export here were going to be subject to a tariff. Now, it turned out that was wrong. It was someone reading a list of code numbers, but the gold market spiked immediately. There was panic in Europe and panic here overnight, and that was Thursday and Friday, and by Monday, the president woke up and said, no tariffs on these things. But what it shows you is the volatility and how easy it is to spook the markets with a careless comment or a careless memo or just a speculative comment about what might happen in the future. The markets are so sensitive right now because the tariffs are basically taxes, and they're a way for government to influence and control the flow of goods across its borders. And this was a perfect example of that.
So why did they group gold bar? Because it was gold bars and only gold bars.
Kilo bars and 100-ounce
So
bars.
why was there a confusion with that and that code? Can you elaborate a little bit on that?
There really hasn't been an explanation of why there was confusion. The Customs Department has a list of items that are subject to tariff, and there are long numbers that are the codes for each item. And this letter went out saying kilo bars and 100-ounce bars fall under this number, and it was just the opinion of a single bureaucrat. And by the time it hit the newspapers and the internet, we had a worldwide reaction, a very steep worldwide reaction. Over 24 hours, it calmed down when people realized this can't possibly be right. And then the president clarified it on Monday.
And Switzerland is such an important country when it comes to the production of gold bars that come in here. One of the largest companies out there is PAMP, Swiss PAMP. A lot of our clients probably own those bars if they have bars. But we also found really quickly how bars are the first thing that gets affected by government intervention.
Well, that's always a problem because the government keeps an eye on these things and they want to tax it, they want to track it, they want to know where it is, which kind of leads us into our next topic, which is cryptocurrency and its impact on your personal privacy. And Eric's done some digging into this and has a few short comments.
One of the things that actually came from one of our clients, he was asking, I've heard all these things about Trump right now, that we're going to, by executive action, we're going to bring cryptocurrency into the overall pile of assets that the United States government is going to allow. We're going to allow these into 401ks. This is a $13 trillion marketplace. Is there opportunity here? Sure, there's opportunity. But the thing that I always like to say is do not compare gold with crypto. And there's a reason why people do this. The reason why people like to lump these two together is because crypto, in its originality, the whole point behind crypto was it had a laundry list of things that it wanted to make sure that it could improve on. It all started with Bitcoin, and Bitcoin was something that would be decentralized from all governments. It was something that would be non-regulated. It was something that would be non-taxable. It was something that could not be taken from or policed by international governments, never mind the US government. Well, then things started to change.
So what happened?
Okay, so it all started really in the beginning. The co-founder, Charlie Shrem, he was actually put into jail, and you, with your legal experience, can tell us a little bit about what happened there.
Well, he was charged with 3 federal offenses, and he did a plea bargain for aiding and abetting, which, in my view, was like jaywalking. Mm-hmm. But they put him in jail for 2 years, and the real upshot is they sent a message to the cryptocurrency world that the government is not going to stand by and not get involved.
And that signal was well received. This was when the beginning started to happen. Then, of course, crypto continued to grow and more cryptos came to pass. And people are making a ton of money. And people are making a ton of money and not paying taxes. So, gee, anyone that thinks that currency is going to be allowed to be unregulated by government has not really studied history. So then what happened with the taxes, John?
The government found a way to impose taxes because the government likes to tax everything it gets its hands on.
It sure does.
And at that point, whether or not you had to pay taxes wasn't clear, and our friends in Washington can't sleep at night if that's not clear. So they started imposing regulations.
Next came really the beginning of the absolute end for privacy, which was when Coinbase went ahead and went public. And maybe you can help us understand what exactly it means to go public.
What it really means, other than making money on the initial stock offering, is you're required to file quarterly financial reports, whether you have business, whether you don't have business, whether you make money or you don't make money. You've let the government into your treasury to look at the books, and if you don't keep those books and you don't make those reports, you could end up in a federal prison camp.
And I mean, not only that, I mean, full SEC regulations are now applied to you. And a lot of people that invest in cryptocurrency, in the beginning, people were buying Bitcoin, which is protected by the blockchain, and you would get your blockchain number. Nobody does that anymore. They just go into one of these baskets of, say, Coinbase or whatever, and they invest within that. Now, with that came one of the largest, not one of the largest scandal in history, which was FTX, which we found out was nothing more than a major Ponzi scheme and completely came crashing down, and billions of dollars were lost. So this goes to show that, is it something that is 100% secure? Well, absolutely not. So the proof is in the pudding. I mean, if you get involved in the wrong scheme, then an FTX can happen to you. Not to say that Coinbase is that's not what we're implying. What we're saying is it's not like gold. If you own gold, you will never go to zero with a bar of gold or with a coin or whatever you decide to actually purchase. So is there opportunity? Yes, but it's also a lot of times it's high risk, high reward, because if you look at the charts of cryptocurrency, insanely volatile. I mean, massive swings to the upside and the downside. So did this work out for you? Well, it depends on where you bought and where you sold and where you fell on that timeline, just like any other investment in the world. So with that being said, perhaps we might also want to consider the idea of the security of, say, like when we were talking about the tariffs, the gold being something that is being looked at by government, crypto, which is something that's fully engaged in government at this point in time. But when we're talking about government intervention, there's another country outside the United States which is really showing us how digital currency and crypto can become one. And maybe you could elaborate on what country that is and what they got in store for their citizens.
Well, our friends in China have been doing this for some time now. Their digital currency is, again, a way to keep track of what people spend, what they earn, what they have, and they even tried an experiment where they issued electronic money with an expiration date, and if you didn't spend it by a certain date, you lost it. It's the ultimate intrusion by government, and when people say it can't happen here, China's a good example. It can happen, and the technology is there.
And don't forget about your social credit score, because that's another thing that I mean, if you're not saying the right things online, that could very much affect your bank account, couldn't it?
Yeah, and we see that a little bit in the back and forth on X and all these other social media. People say things, there's an immediate reaction, and it's very easy to track and impose one of these draconian discipline systems on top of it.
Not to mention, along with the adaptation of AI, because having one single person sit there and try to regulate a financial system, well, before would have been thought to be impossible. But in today's world of AI, don't worry, the machines will be more than happy to help regulate all this for you. And if that concerns you, well, it just means you're a common sense type of person, wouldn't you say?
Yeah, and that brings us back to our second question today. What is the true financial vessel of security? It's gold. Gold is a hard asset. You have physical control of it. Gold doesn't pay interest. It doesn't pay dividends. It doesn't go bankrupt. It doesn't go out of business. And if you buy certain gold items under our current tax rules, it's private. You don't have to report it.
Once again, people that are listening to this will say, well, if it's private, then how can they, impose tariffs on bars? Is there another product out there that might be more private than, say, a bar of gold?
Yes, the bar of gold is the least private. The most private are what we call the investment grade coins, which you've heard us talk about. If you want to learn more about them, ask for our investment grade coin report. The point is these coins don't require the paper trail that a gold bar does. And it's not a workaround, it's part of the tax code, so you don't have to worry about that.
And I would like to close with this. To be clear, all of the things that we're talking about today, we're not against crypto, we're not against gold bars, we're not against those things, but what you need to know is the reality and the rules and the regulations and the reason that people invest in these products. Don't be swayed to get involved in something for the wrong reasons. If the reasons that you are looking at that investment make sense to you, then it's probably a good play. But if you're getting involved in something because you believe it's something that it's not, we would strongly advise you look to another type of investment vessel to try to go ahead and secure your needs and your financial future for you and your family. With that, I'm going to go ahead and sign off today. Thank you, John, for all of your expertise. And we will see you next week right here on The Gold Spot.
If you enjoyed today's Gold Spot, like or subscribe to both our YouTube and Rumble channels. Also, comment below if you have any questions or if you'd like to hear us talk about a specific topic in a future video.